Can someone explain to me what's going on with the Oh, it's the Santa Claus rally. In today's video, we're going to take a look at what the next steps are for the market, how much higher we can go. There are a few warning signals to take into consideration. We're going to look at those things together. All right, so without further ado, let's get started with the video. First and foremost, let's get right into the thick of things. This is one of the most worrisome things for bulls at the moment. The VIX is rising as the overall market is also rising. So the reason why watching the VIX is important is because the VIX generally is supposed to have an inverse relationship to the market. If the VIX rises and starts to show strength, generally that is supposed to be bearish for the overall market. The fact that the VIX and the overall market are both rising in unison, the VIX is up 6.5% today, while the overall market is up 0.3% and the NASDAQ is up 1.4%. This is generally not supposed to happen. Something is going to give. And usually when this occurs, there tends to be a bit of a pullback in the overall market. Whether that occurs or not is yet to be seen, but it is a warning signal nonetheless. The other thing that I want to take a look at together here is the seasonality during the month of December. We do end up getting some sort of choppy price action and a pullback during this week, generally is what ends up happening. And then towards the end of December into January as well, the market pumps. So is that going to occur this week? There are important things going on this week. Let's take a look at what it is. So number one, most important thing that's going to occur this week is the federal funds rate and the FOMC press conference. So there's a 99% chance that we do get a rate cut on Wednesday. But then FOMC's press conference is going to be very, very indicative of the next movement in the market. Inflation does need to get curbed. We're going to see how Fed Powell steers around those questions again. And then Thursday morning, we have GDP numbers coming out, 8:30 a.m. Eastern time, prior to market open. These two things are very, very important in the overall scheme of things. And specifically because I had a really, really strong indication that today was going to be a very, very terrible trading day. It was going to be very, very choppy. I let the group know, hey guys, do not overtrade today. Today is a beautiful opportunity for people, for the market makers to chop people around. And look at what ended up happening. This is the 1 minute time frame of the SPY. We were stagnant for so long this entire morning. And every single time there was some sort of a bullish potential move, it was ripped right back down. And we stayed within this almost 30-cent range for over almost 2 hours. And then we ended up drifting a bit higher and then some more chop. This was a really, really terrible trading condition day. And thankfully, we did very, very well. We made two amazing trades to start the morning. But after the initial volatility was over, it was very, very difficult to take any high-quality trades. And it's days like this. The reason why is because days leading up to important macroeconomic news tend to be very, very choppy and not fluid. When the market is fluid, oh man, yeah, okay, we see a long opportunity, boom, long. Short opportunity, boom, short. Boom, bam, fluidity, beautiful fluidity. But when there's GDP news, when there's FOMC statement, when it's the last the last few weeks of the year, a lot of these things are going to end up causing some choppiness in the market, and especially soon for the Russell 2000, we're going to see a lot more strength out of the Russell 2000. I'm going to explain why. So I'm basically going down the list really, really quickly here. But this setup is very, very bullish in my opinion. The Russell leading into the end of the year, during this time, especially towards the end of the week, if we get any sort of move to the downside and we start to close below the Bollinger Bands here, this is an amazing opportunity to long in my opinion. Not your financial advisor. This is not financial advice, but what we see here is a lower standard deviation starting to curl upwards on the daily chart. What this is telling us is that the downside room for the Russell is lessening. So basically, it was at 2306. Now it's at 2316. And as the lower level continues to increase, the odds of a bounce increase as well. So this is a really, really nice technical pattern here. What this is doing is it's giving a clear-cut level that we can break above, retest, and continue to rise into the new year, essentially. And the Russell, based off of this setup, it's the most beaten down according when you compare it to the S&P and the NASDAQ, obviously. But it has a lot of potential tailwinds that can cause the price to increase. And I really, really like the Russell here, especially if it falls a bit lower. The Russell looks really, really good. The next thing is that this, I'm sure everyone was looking at this rising wedge on the NASDAQ, right? This is currently breaking out of the rising wedge. We were holding this level of support for quite some time. And, you could see multiple touches here on the NQ futures. Bounce here, bounce here, bounce here. And then we held this level and we ripped to the upside. Now, is this a time to start going long on the NASDAQ? Well, I mean, this is clearly really, really, really bullish. Generally, when we get a rip to the upside like this, I mean, it needs to... Listen, guys, like when a bearish setup like this reverses, all sort of bearish potential gets thrown out the window. Now, like I said, the only thing that can save this at the moment is if we get a complete giant rip to the downside. I don't know how that would occur. I don't know what would need to happen in the world or in the market or something like that for something like this to drop down lower, but we are rising very, very heavily. The NASDAQ ripped to the upside. All of the large tech stocks are starting to go bananas at the moment. Tesla is above 250. It broke the 50, and like it's super, super bullish. Apple is at 150. All of these large tech stocks are ripping. So that's what's causing the NASDAQ to rip. What generally should be happening, in my opinion, is instead of trying to short the market, lean long. And what I would much rather be doing is leaning long stocks that should be bouncing, stocks that should be bullish. And, it's going to be these tech stocks to find good opportunities to go long on tech stocks that are showing bullish potential, and the Russell. And that is currently what it is. If you do want to end up going short, you need to go short with a very long time horizon. Or, just go long GameStop. But yeah, I mean, like, there's a lot of different long opportunities. We still did not take Mera. I still want a bit lower on Mera. I am a bit greedy on Mera, but as you can see, similar to what the Russell did, Mera had a similar sort of setup. It was a downtrend, and it broke to the upside. Obviously, this is very steep to the downside, but we're going to see a lot of different setups in economically sensitive sort of stocks that are the same sort of setup to the upside. So you see how Mera is breaking to the upside? It's the same concept as what I see on the Russell. So a few months ago, if you guys remember, this exact sort of setup occurred on almost every single crypto coin. And it's because a lot of them basically move in unison. So this is essentially what I'm looking at, man. We see Bitcoin breaking above 105. It held this trend line. This is a trend line from, like, my chart is very, very messy back here. My chart is disgusting. But this was an uptrend from May of 2021. This blue line here. We came and retested this. And, yeah, this was a clear-cut, beautiful, beautiful level to hold. And now it's curling upwards. I personally don't. I think we should get a bit of a pullback first, but these are the upside targets that I have on Bitcoin for this cycle. We have 120, we have 156, and then we also have 180. So all of these are potential bounce levels for this cycle here. And if Bitcoin moves up another 100% here, the overall market is Mara and these other stocks can really do well. But still on Mara, I want a bit lower. And really, that's it. Honestly, like, how are you supposed to be bearish on a market when Apple is at 250, when Tesla is above 450, it's at 470 in the after hours? This is just ridiculous. It's at $400. It was at $400 a few days ago. It jumped up another 15% in like 4 days. Ridiculous. Let's take a look at chips. So chips are so Nvidia is taking a bit of a hit. AMD also didn't do too well. But AMD is holding this downtrend line. Once again, I want AMD to break down a bit lower. But AMD is really, it's one of these other stocks that I think could end up bouncing. And, it does look like it's going to end up bouncing, especially based off of these just hugging this downtrend line. It's a good opportunity. It's a good indication that it doesn't want to completely capitulate. And for that reason, I just want it a little closer to 120. If we miss the bounce, we miss the bounce. But all of this is it's much better risk reward than trying to buy it in the upper 130s. So, yeah, especially if you have a bullish outlook. Look, if you have a bullish outlook, according to seasonality, instead of trying to catch every single top, when the top right now, it's not as clear cut, it's not as safe. When it becomes safe, I'm going to start being very, very bearish. I'm going to be very brash. I'm going to be very open. Right now, it still makes sense to try to find local bottoms in these winners, in stocks that have an opportunity to bounce. And that's what I currently think should be happening in the overall market. I'm very, very excited to see what the next steps are. This whole week is going to be very exciting as well. GameStop really, really skyrocketed in the last couple of minutes in the market. Whether that's going to continue as well is yet to be seen. But, we see another triangle forming on GameStop. GameStop is also a Russell 2000 name. It's an economically sensitive stock. Let's see if this ends up playing out to the upside as well. Very simple. Are we going to break to the upside, retest, and then continue? Same concept as the IWM. Same concept as Mara. And currently, yeah, man, heading into January, something like this is very, very possible. But generally, I believe that a large move should occur in GameStop to the upside. We should see, I would be very shocked if we don't see $45 maximum by May. So between January and May, we should see a 100% move in GameStop. So that's my thought process on that. And I'm very excited for that to occur. And if it does, that'd be great. So I guess with that being said, guys, I hope you guys have a wonderful rest of your day. If you guys enjoyed the video, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.